Hi, this is Matthew Cratter from Trader University, and today I'm going to talk about the recent breakout in gold. There's some very exciting developments in the gold market. If you're a fan of gold or of gold stocks, I encourage you to hit the subscribe button, subscribe to my YouTube channel. I'm going to be making more videos about gold going forward. You can see that we've basically been in a bear market for gold since the middle of 2011. I have a chart here. This is a weekly chart, weekly candlestick chart of gold, GLD, the ETF, which allows you to trade gold a little bit like a stock. And you can see we had a very big sell-off after gold peaked in the 1800s, $1,800 an ounce roughly, up to $1,900 an ounce. And then it began to go sideways, really since late 2014. And we've been trapped in this trading range between 100 and 130 on the ETF, which corresponds to $1,000 an ounce and $1,300 an ounce. And you can see we've been sort of bouncing between these two levels, doing sort of a bottoming process. In the process, though, we've been making some higher lows, which is quite encouraging. We had a low in late 2015, a low in 2017, and then most recently in 2018, a higher low. And now we are breaking above this key level of 130, and you can see we're trading close to 132.50. So this is definitely a major development. I've been asked the reasons for it. Obviously, there's rumblings of an impending war with Iran, some other geopolitical stuff. But I think the real culprit here has been the most recent Fed meeting, and basically rates moving down all across the U.S. yield curve. So these are Treasury rates. You can see the 6-month rates moved from about 2.3 at the beginning of June to down to close to 2%. And what this means is that gold and things like Bitcoin, these sort of zero yield securities, become a lot more attractive. Now, why is this? Well, if you can get 2.5% in a money market or a savings account, you might just go ahead and take that. But if you're getting a much lower rate, then it might make sense to hold something that doesn't pay a dividend or doesn't bear any yield, like gold. And we can see something really similar happening with, so here's the daily chart of gold. We can see something really similar happening with Bitcoin as well. It had its own sort of very fast bottoming process and mini bear market, and it's been breaking out really for all of 2019. And it's interesting, the chart's not exactly like gold, but as a zero yield instrument, there are many similarities. But for this lecture, we're really going to focus on gold. Now, this is the daily chart. You can see this is almost looks like one of our momentum or rocket stocks. You have the gold. This again, the ETF GLD. You have the ETF itself trading above the blue line here, which is the 50-day moving average, which is above the red line, which is the 200-day moving average. You can see we've had an increase in volume as this breakout has occurred, which is quite bullish. And we did have the golden cross here where the 50-day moving average moved above the 200-day moving average. So everything's looking quite nice here in terms of breaking out to new multi-year highs. And so there are a couple ways you can play this. You can play it just with GLD itself, and you can sort of swing trade it here, maybe put a stop at the 126 level. And, eventually this 50-day moving average is going to cross up and become a nice trailing stop. The other way to play it would be with some of the gold stocks. And the two biggest that at least trade in the US are Newmont Gold Corp. The ticker is NEM. This one is looking interesting as well, trading at not quite at multi-year highs. The gold stocks will trade a little bit differently depending on their fundamentals. But maybe you do a basket of these. And so the other one would be GOLD. And it's actually called Barrick. Barrick Gold. And the ticker is GOLD. It's actually a stock. It's not the... Now this one looks a little bit more... They've probably hedged their future exposure to gold a little less. And so their chart looks a lot more like gold. And so I would probably go with this one over Newmont. There are also lots of small gold mining stocks. If you have a favorite, I'd encourage you to drop it in the comments below so that we can all learn from each other. But I think this is an interesting place to be. It's not clear that gold is a good hedge in a bear market. A lot of assets tend to go down together. But this has a very good chart. I think it's definitely worth a trade. on this breakout. So it's something I'm going to be keeping an eye on. And I'm still long the enterprise software stocks and using a trailing stop on those as well. But adding some gold might make it a little bit more of a balanced portfolio. Thanks a lot for listening. If you enjoyed this, please subscribe to my channel and let me know what other videos you'd like me to make going forward. I can do some videos about metals, or we can go back and do some more stuff on rocket stocks. Again, thanks for listening, and I'll see you in the next video.